When I pull up a blank chart just like this, the first thing I want to do is to build a narrative of the higher time frame. I want to know what's the overall order flow of the market. What is the higher time frame market structure doing? What is the lower time frame market structure doing? Whether it is bullish or bearish, or whether price is in a push phase or the pullback phase. So right now, like I said, our job is to really look at the higher time frame to see what sort of range we are playing in right now. And you can see right now we're on a daily time frame, and if you look at the market structure, price is in a bearish order flow. How do we know that? Price goes down, pullback, goes down, and then pullback, creating a lower high, and right now price seems to be creating a new lower low. So price has just broke through the last lower low, which is this low right here. Right, this is the last lower low, and price has just broke through it, creating our break of structure. So right now, what we are basically seeing is downtrend market structure. Price is in a bearish order flow on the higher time frames, on the daily time frame. So at this point of time, after price break structure, what are we expecting price to do? We are expecting price to pull back. Okay, because remember, price will never go down in a straight line or go up in a straight line. It has to go down, pull back a little bit, go down and pull back a little bit, and then go down even further, breaking through the last low, and then starts pulling back. So that is basically what we are expecting price to do after price has just broke structure. And at this point of time, you must be asking yourself, where is price going to pull back to, and where is price going to start pulling back? That is when we make use of our supply and demand zones, right? Price is most likely going to pull back to a supply zone that actually created the lower high right here. So at this lower high, there's going to be some sort of supply zone, right, that cause, supply to step into the market and the sellers to push price all the way down here. So there we have probably some sort of supply zone. So we are basically expecting price to pull back up to this supply zone and then continue with the overall bearish order flow, right? This is when supply will step back into the market and push the price down to go down even lower to create your new low. Now, that is where price is going to pull back to. Next thing you must ask yourself is, where is price going to start pulling back? And it's most likely going to start pulling back at some sort of demand zone that we have in the past, unmitigated demand zone, right? Maybe there's a demand zone right here that causes price to push up, right? So this demand zone is basically going to cause price to start pulling back, right? And that is basically all you need to know in terms of market structure and supply and demand. I just simplified that in like freaking 1 minute, which is crazy. So what happened right here is that after price broke structure, you are anticipating the pullback. And like I said, where is price going to pull back to? You look towards your left and you basically try to identify all the demand zones that we have right here. So I'll go down to like the 4-hour time frame to see. You can see there is a demand zone at this area right here. This is when price starts pulling back, consolidate a little bit before demand step into the market and push price all the way up here. So this entire range right here would be your demand zone. But as you can see, price has already bypassed that, right? So I wouldn't really regard this as a valid demand zone anymore, since it has been completely taken out. Now you want to ask yourself, where's the next demand zone? Once again, zoom back a little bit and just go back a little bit, and you can see this is where your imbalance step into the market. You can see right here, there's a lot of imbalance right here where buyers step inside the market, push the price up, and resulting in this huge move right here. After price goes up, pull back, and then goes up even further. So what we can do is that we can mark out like a little, this range right here, this would be your demand zone, right? So this is the next point of interest that price is potentially gonna go to. And you can see price is already at that point of interest, right? Price is already at the demand zone. So now our job is to observe what price is gonna do next. We don't want to enter for a sell here, because if you enter for a sell here, your stop loss will be above the last lower high, which is this one or even this one right here. And your take profit could maybe just be at the next point of interest, the next demand zone, which is right here. And you can see how this is a very bad risk to reward decision. This is a very unprofitable, a low quality trade setup, a low probability trade setup. Because right now price is in the demand zone, and right now we are expecting price to pull back. And what you can also do to keep things really simple and clean is also to identify the swing trading range that we are basically playing within, right? So I'll basically just zoom in to see what price is doing right here, because you don't want to be caring about all this noise that we have right here. All of these are just noise. All of these are just distraction. So you zoom into what price is doing right here, and you can mark up the swing high that we have right here. This is your swing high. So I'll put that as a swing high right there. And then I'll place like a normal line right there. And then there is your swing low that we have right here. So basically, we are going to be playing within this range, right? This is your high, and this is your low. So we are basically going to be focusing on what price is doing within this range. And once price starts pulling back at this area right here, creating that higher high and higher low, right, then we can anticipate price to potentially come up to this swing high that we have right there to mitigate it. So at this point of time, once again, we have identified our swing range. We know that the overall higher time frame order flow is bearish, and we know that price has just broke structural, and right now we are anticipating that pullback to happen. So I'm just going to play price forward a little bit to see what price does. And you can see, okay, you can see this is a sign that tells us that, you know what, maybe the bulls are about to enter into the market at this demand zone to push price up. The pullback is about to start happening, right? So right now, this will be your counter trend trade setup, right? If you're entering for trades over here, higher probability trade setup will be to enter for buy position, because you're playing that counter trend pullback, and you know for a fact that price is gonna turn bullish for a short amount of time to actually facilitate that pullback before price hit some sort of higher time frame supply zone and continue going down even further. So that is basically what we are visualizing in our head. So at this point of time, I'm gonna see what price does at this demand zone that we have right here, at this swing low being formed right there. So right now we're in the 4 hour time frame, and I can see where is the last lower high, right? Based on minor structure, the last lower high will be this one right here, right? This will be the last lower high that we have right there. Maybe this one I can just get refine it to like this. Yeah, we just put it like that. So at this point of time, this is the last lower high. So in order for price to turn bullish, I believe that price has to break through the last lower high to confirm to us that the bulls have officially stepped into the market, and then maybe start creating a pullback and then go up even further. Then that is when you can look for your long positions, your buy position. So at this point of time, I'm still going to be waiting, but this is a very good sign that tells us that demand have stepped into the market. And if you look closely, guess what? We also have our liquidity sweep right here, right? Remember, below a swing low like this, there is going to be liquidity build up below this swing low. Why? Because a lot of retail traders, when they see price reversing at this demand zone, they will immediately enter for a buy right there, and they're going to be placing the stop loss below this low right there. And when that happens, look at them, they just got stopped out. Smart money was able to come down here, sweep the available liquidity below this low, and then potentially going to push price down, up. So right now, let's continue to see what price does, but we can just mark up a liquidity sweep happen right here first, right there. So you can see price goes up and creating our market shift, a shift of structure, which tells us that right now, this bearish trend that we have right here is gone, right? The bearish order flow is gone. And right now, we should only be looking for buys. We should play long positions. We should basically stack our buy setups, right? So at this point of time, we know that the structure has shifted from bearish to bullish, and price has flipped from supply to demand, right? So I can mark out my market shift right now. So right now, I'm looking for my entry, since price has already gave me a confirmation that the market has shifted bullish. So at this point of time, I don't want to enter right here once again, because price can easily come up here, and this could just be a liquidity sweep on these highs right there, and then continue to go down even further. I want the extra confirmation. After price actually comes down here, create that higher low, this gives us that extra confirmation for us to actually enter into the trade. So at this point of time, I'm still waiting to see whether price comes down here, and most likely I'm going to be marking some sort of point of interest right here to actually signify my entry area. So I'll go down to the 15-minute time frame to look for my entries, and you can see there's an area right here. This will be your demand zone. The demand zone right here, this will be basically an area where there is also a flip zone, because this is where price actually reacted from this supply zone and then come down here and creating a flip zone right there, right? And actually shifted from supply to demand. So there's also a flip zone there as well. So at this point of time, I'm waiting for price to come back, or rather pull back to this point of interest. Then I'll look for my entries. So I'll see what happens next. And you can see price starts pulling back, right? This point of time, we're starting pulling back to this point of interest right here. And I almost forgot, but this is the first point of interest. And then there is also an extreme zone right here. There's also an extreme zone right here, extreme point of interest right here, because this is also when price actually had that huge mitigation, right? That huge demand step into the market and actually pivot and hit back up. So this is a very strong area as well. Strong demand zone or order block, whatever you like to call it, right? So at this point of time, the question I'm asking myself is, which one is it gonna react from? It could come down to this area right here and react from this area. or it can even come down all the way down to this area here and then react from this area. And the truth is, I don't have a goddamn crystal ball. I don't know which one is it gonna react from. But what we do as traders is to react to the market. Just like what Bruce Lee said, be water, my friend. What does Bruce Lee mean when he said that? Be water, my friend. That means you need to be flexible in terms of your approach. You need to be adaptive. You need to adapt to what the market is showing you rather than imposing your bias onto the market itself. So at this point of time, right, price has come down to this area right here. So I'm seeing to see whether price actually react from this area that we have right here or no. So you can see price is coming down even lower, tapping inside this zone, and boom, it completely bypassed this area that we have right here, this demand zone that we have right here. And let's just pull back a little bit, right? It completely bypassed this demand zone that we have right there. So we can just remove this. And right now, since it's completely disregarded this, where should we expect price to go next? To this extreme zone that we have right here. So at this point of time, you can wait, you can see, boom, price step into the extreme zone. Right now, this is where I will go down to the 1 minute time frame to look for my sniper entries. The key is in the details. This is where you get the sniper entries, guys. If you can go down to the 1 minute time frame and execute this successfully, you will be able to get those high risk to reward ratio trade setups that you see your favorite trader does. You know, those 1:20 risk to reward ratio, 1:30 risk to reward ratio trade setups, right? So go down to the 1 minute time frame and you can see what price is doing at this demand zone that we have right here. Bear in mind, this is when there was a large amount of demand stepping into the market that we can see right here, right? Large demand step into the market. And if you look towards the left, there is also your liquidity sweep right here where price actually created a V-shaped reaction. And then right now, price come back up, come back down to this sweep zone that we have right here and then reacted from it. So at this point of time, we are at this strong point of interest where we know for a fact that demand have entered into the market where we know for a fact that smart money have entered into the market in the past at this point of interest, at this price point. So we can expect smart money to actually enter into the trade at this price point as well. So at this point of time, I'm going to be observing to see what price does here at this demand zone. And you can see price creating this low right here. Once again, liquidity build up right here. And then this is when price swept the available liquidity that we have below these lows. And then where's the last lower high, right? This would be the last lower high right here. That would be the last lower high. And right now, since price actually broke through it, it pretty much confirmed to us that price have shifted from bearish to bullish. And right now, the 1 minute time frame structure is aligned with the 15 minute time frame structure, which show us that price is turning bullish to facilitate the pullback of the higher time frames. So at this point of time, right, I'm looking for my entry. Slowly, you can see this somewhere right around here. This is when you can potentially look for your entry trade setup right here. You know, you got that demand being built up right here. You can wait for price to actually pull back to this area right here. And that is what I'll potentially do. You can see that pivot happened right here after creating that market shift. And right now, I'm waiting for price to pull back to this demand zone here. Right, you can see right now it's still building up at this demand area right here. And you can see we got a very nice pullback right here. So this is where you can potentially look for some nice entry trade setup. But we'll wait and see. Okay, you can see price is reacting to this extreme zone first. Right, extreme zone first. Once again, the extreme order block that we have right there seems to be reacting to it. And we'll see what price does right there. And boom, somewhere right around here, what we have is your mitigation of demand, right? Where price actually pulls back into this area here, mitigate this extreme area right here, and then goes up and actually creating this demand zone that we have right here, where there's a lot of imbalance of demand step into the market. So this is a sign that tells us that price is turning bullish. No, price is already turned bullish. This is a sign that tells us that price is going to skyrocket, right? So at this point of time, you can look for your entries somewhere right around here where price actually created this imbalance. Or if you want to be even safer, you can wait for price to actually pull back to this area right here. Right, but this is honestly a good sign for me to actually enter for the trade, right? Where price actually mitigated this area right here. And most likely I'll be placing my stop loss below these lows right there. And this is when you can target the next swing high on the 15-minute time frame, right? This is really where you are able to get those sniper entries, right? We enter on the 1 minute time frame, and then right now on the 15-minute time frame, we can look to target at this swing high that we have right here, right? So if you look towards the left, this is where price actually goes down, pull back, give us a supply right here, consolidate at this area right here, and then push down even further. So this is a supply zone that you can potentially target right there. Or if you want to swing for the fences, you can even target this high that we have right here. And this is where like the interesting thing really happens, right? If you go all the way up to the 4-hour time frame, right? Or rather the 1-hour time frame, you can see, like what we have mentioned just now, price is turning bullish to facilitate the pullback on the higher time frame order flow. So we are expecting price to pull back to where? To this supply zone that we have right here. So let me just mark up this supply zone right here. You can see this entire area right here. This is your supply zone. Right, this is where large amount of supply step into the market and push the price all the way down here, leading to a break of structure right there. So right now, like I said, price is gonna turn bullish to facilitate that higher time frame pullback. Because bear in mind, the higher time frame order flow is still bearish, right? Everything is still bearish, everything is still going back down. But right now, price is just gonna turn bullish for a short amount of time to, once again, pull back to where? Where is it gonna pull back to? To this supply zone that we have right here before it wreck from this area and potentially goes down there and create a new low. This is really the key, guys. Right now, that is basically tell us that, okay, the time frame, the immediate bias is bullish on the higher time frame. On the 4-hour time frame, it is bullish. On the 1-hour time frame, it is bullish. On the 15-minute time frame, it is bullish. And on the 1-minute time frame, it is bullish. All the time frame is aligned to our favor. So what you can potentially do is that instead of taking profit at this like little swing high that we have right here, right? You can even swing for the fences by targeting all the way up here at this higher time frame supply zone that we have right here. And this will be a 1:72 risk to reward ratio trade setup, right? Just look at this number right here. I will drag it out, but it's just so ridiculous, right? This is completely insane. You don't know how insane this is. This is like risking $100 to make $7,200. Can you imagine that? Risking $100 to make $7,200, or risking $1,000 to make $72,000. You know how insane that is? It's freaking insane. That is why I tell you guys, if you can master these sniper entries and you trade like a sniper, you will be able to bank consistent profits and increase your win rate and increase your risk to reward ratio, and you will be able to really maximize your profits, right? But this is really the best case scenario where there is no drawdown whatsoever after price just goes up like this, right? That's the best case scenario. But more often than not, this is obviously not a very realistic trade setup, right? This is just like swinging for the fences, you know. What price can potentially do is you could go up there and then come down here, tap into this area again before going up even further. In that case, you would just get stopped out. So I wouldn't personally do this, but what I'm saying is that you can, right? You can do this. If you get really good at entries, this will be the type of entries that you get. But let's say that you're not so good yet, let's just target at this area right here, this last swing high that we have, this last supply zone, right? Let's just be realistic first, because right now you're broke. Your next goal is to not be broke. It's not to be rich, but not be broke. It's to break even. It's to stop losing money. That is your next goal, all right? So at this point of time, we got tapped into the trade. Right now, this is on the 1-minute time frame, you can see we got tapped into the trade, and right now, you can observe to see what price does here. Okay, this is gonna take forever, honestly. Maybe not, maybe it's not gonna take forever, but this is the 1:13, which is still not bad, right? You're risking 1% to 13%, and 13% is actually pretty good, because if you think about it, right, 13% in 1 month, that is like better than professional traders. Professional traders get like 5 to 10% return on investment per month. So 13% is pretty damn good. Yeah, as you can see, eventually price goes up there and smash your take profit right there. You can see, if you go on the 1-minute time frame, you can see price has already smashed your take profit, and that is how you get those sniper entries, ladies and gents. Now, what if, you know what, this is good, you close this, 1:13 risk to reward ratio trade setup, you're happy, what's next? For me, when I win a trade, I don't just sit there and celebrate with champagne whatsoever. I'm thinking about what's next. I don't rest on my victories. I'm thinking about what trade setup, what is the next opportunity that I can potentially take. So 1:13 right here, you're up 13%, happy days, boom, gone. All right, we'll just move on to the next trade setup. So at this point of time, bear in mind, we are seeing what price is doing at this area right here, right? And remember, price haven't officially like start creating the higher time frame. I mean, no, the higher No, the bullish order flow. What am I speaking? Price have not officially started creating the higher highs and higher lows yet. It is still within this consolidation that we have right here, right? So it's still consolidating. Once again, this is very good, right? This is telling us that this bearish momentum is gone. That is why price is consolidating around at this area right here. And this is also your accumulation phase, where it states that smart money could be just stacking their buy orders at this area right here. They are buying here, they're buying here, they're buying here, buy here, buy here, buy here. They're basically stacking their buy orders at this demand zone so that eventually when price pulls back up there, guess what? They make a lot of profits. So at this point of time, right, I'm observing to see what price is doing, right? Maybe price will come down into this area again, or maybe it could not, right? So you can see what price is doing. Maybe we'll go down to the 1 hour time frame, 4 hour time frame. You can see right here. Right here, this is when your demand have stepped into the market, right? There's a demand zone being formed right there. You can see price seems to be mitigating this demand zone right here. And right now, price has officially starting the up move, right? This is the next swing high that we are looking forward for it to play out, right? Price can potentially go up there and break through this high right there, create a new higher high, and then pull back to and create a new higher low, and then create a higher high and higher low, a higher high, higher low like this. That higher time frame, that bullish order flow, right? The bullish market structure. So at this point of time, I'm still see what price does, and you can see price is respecting at this demand zone right here. So what you can potentially do is that you can enter for a buy somewhere right around here if you want. Once again, target this area right here. This will be a much more realistic trade setup right there. Right, again, that's something you can do, right? You can see price step into that demand zone, demand step into the market, push price up and up and up and up. And right now it just created that new higher high, because price just broke through the last high that we have right now to create a new higher high. At this point of time, after price create a higher high, what are you expecting? You're expecting price to start pulling back on the lower time frames. You're expecting price to start pulling back to some sort of demand zone that we have right here, tap into it, and then create that new higher low and goes up even further, creating a new bullish break of structural, and then create a new higher low, so on and so forth. That is basically what you are expecting price to do, right? So at this point of time, price is going up and up, slowly it's going up. You can see it's creating new demand zones, right? This is the last demand zone, and there's a new demand zone right here. So once again, you can look for another entry somewhere right around here where price actually mitigated this demand zone right here, and then once again target this area right here. You can see price is just slowly playing in your favor right now. Right, goes up even further, right? Tap into this, taps into it. Okay, boom. Right here, this is when price could potentially sweeping the available liquidity that we have below these lows right there. Right, so let's say in this case you got stopped out, it's okay, we move on to the next trade. We are asking ourselves whether our trade idea is still valid, whether price is still bullish, and you can see price actually came down here to mitigate this little demand zone that we have right here, right? This demand zone right here mitigates it, and then go, and you have also swept the available liquidity that we have below these lows right there. So this could be a much more better entry right there below this demand zone, and take profit at this area once again. And you can see, or you can even take profit just at like this swing high that we have being built up right there, right? You can see this is basically my thought process when I am trading. Okay, 1 is the 3, not so shabby. And then price goes up, smash your take profit, or once again you can take partial profits here, and you can have your overall take profit here, whatever you like to do to actually manage your trade setup. That is basically the case, right? And you can see price just goes up and up and up and up and up. Maybe we could go up to the 4 hour time frame, and you can see eventually price will most likely get up to this area right here. Right, once again, it's just going up, creating the higher highs and higher low, and boom, you smash your take profit right there. Ladies and gents, this is how you do it. Basically, what you are doing is that you are essentially waiting for that lower time frame structure to align with the higher time frame structure, and you are basically focusing heavily on market structure on the higher time frame, and then you're going down to the smaller time frame, like the 1 minute time frame, to look for your entries, right? And that is really how you get those sniper entries, right, guys? If you can really master this strategy, like I said, you will be able to massively increase your risk to reward ratio and bank profits consistently. Once again, you are gonna be very patient, right? I entered for this trade setup right here because I had all the confluences in the world that tells me that, okay, we are in that pullback phase. We are in that bullish order flow phase. And we have multiple confluence. We also have price at this demand zone right here, where we know for a fact that demand is stepping into this market, right? So like I said, you need to understand why the market move, how the market move in order to trade, not trade based on those stupid chart patterns, stupid retail trading concepts, following some candlestick patterns or whatnot. No, you have to understand why price move, how price move, and trade with a purpose. And that is how you win in the markets consistently.